quite bullish on India. It was one of your top 3 country sectors performing last year.
Absolutely. You know, this is a very much a run the winners story. And the background to the story is a decline in inflation. We think that decline in inflation will free up discretionary income, and you'll begin to see consumption accelerated in India and industrial production begin to accelerate. And as that happens, earnings will move higher. And the forward PE of the market, which admittedly is reasonably high at this point, will look comfortable as the earnings come through.
And oil is also a big boon for India as well in terms of fuel subsidies.
Well, it is. And now we have no fuel subsidies in India, and we're watching both the gasoline and the diesel price fall. It reduces your risk premium in a reduction in the current account deficit. And in that the government's not wasting money on subsidizing fuel, it should allow more money to be spent on social services, on education, as well as on infrastructure.
And Modi's on track in terms of his reform. I mean, the honeymoon seems to be still ongoing for Modi.
Well, yes, I think he is still on track, and we had a number of bills getting through Parliament, whether it was land acquisition, coal blocks, these types of things. So we're encouraged that there's progress being made there. But I think rather than looking at necessarily acts of Parliament, it's much more a story of a government that's doing business, getting things done very efficiently.
All right. When you take a look at emerging markets, India, of course, being something that you're overweight on, where else are you positive?
Well, we're overweight on China, and in the ASEAN region, we continue to be overweight Indonesia, Thailand, and the Philippines. Outside Asia, it's quite difficult to find things that we like. At this point, we are overweight Turkey. Yeah. We're also overweight Mexico. Mexico's got a good, interesting domestic story. Yeah. However, it is an oil producer, and the market's certainly been lagging because of that reason.
What do you like about Mexico's proximity to U.S. consumer market?
Yeah, so it's incredibly leveraged to the U.S. consumer. And if you look at the consumer data at this point, we're seeing the developed market consumer the strongest we've seen them in 5 years. Yeah. So there's a lot of focus at the moment about the bad news and the fall in the oil price, and perhaps not enough being focused on the fact that this is a big tax cut for the global consumer.
Absolutely. And for U.S. consumers, that's an extra $1,000 to spend on anything they want.